Alright, so let's begin the show and let's begin with the recipe of making quick buck in the market. Now, what are the kind of investment instruments where you can really, in short term, can make good profit or maybe add on more to your income? And what could be the risk involved in it? What are the investment instruments that we are talking about? Let's dive deep into all of this. Today, I have with me Anant Ladha, founder Invest Aaj For Kal. So, good evening, Anant, and welcome to the show. Clearly, it's very important for an investor to understand the nitty-gritties involved in having your bets placed for short, medium, or a longer term period. Okay, but Anand, when it comes to just playing the short-term bet or playing the short-term game, typically what kind of investment instruments are you looking at? Or if we just talk about equity, what are the ways of we'll get into the do's and don'ts of those particular instruments later on, but what could be the way to get into a short term bet in the equity market?
Hi, ma'am. Firstly, good evening. Happy to connect with you. See, looking out for short term, we have multiple options in equity market. First is IPO, which is very interesting off lately. And looking at Indian economy, I personally feel if we keep growing, we can have more than 1,000 IPOs in next 5 years. So we can have opportunity out there. Second option can be swing trading, provided you have that skill and you have that mindset of picking up stocks. Swing trading can be a very good option for you. Third, a bit of the risky one can be FNO trading in stock market.
Let's just take all these investment instruments or ways of putting money for short term in the market one by one. Let's talk about IPOs, where we are seeing it's a trend or season of IPOs going on. A lot actually goes into deciding whether you should be putting your money in a particular IPO or not. One way is to watch ET Now regularly, where we keep guiding you on the IPOs which are coming in the market. But apart from that, you can hear a lot of experts. But what kind of IPO is good for your portfolio? Even if it is a short term or a short money making bet, how do you analyze if this should be the IPO for you?
Ma'am, a very interesting point and a very interesting question, because looking at the Indian markets and Indian cycle, next 5 year can be huge for IPOs. So yes, we need to learn how to study IPOs. There can be three simple pointers which is to be taken care of while deciding whether you want to participate in any IPO or you want to avoid it. First is you need to understand what's the background of the promoter. How will you get to know about it? You can watch it, watch some promoters interview on maybe on your shows, and you can learn about them. You can just read the offer document and check if there is any pending litigation against the company or against the promoter, or if you have other companies of the same promoters, you can see you can take them as an example and check how they have performed with other companies. So first you need to check background of the promoters. Second important point is valuation. In valuation, you have to see the company which is coming out with the IPO, and you have to compare that company versus the other listed peers which is available in the market already. So you can compare on some basic frontiers. For example, what's the return of equity of the company which is coming with new IPO versus their peer. You can compare with pointers like PE ratio. What's the valuation which the new company is demanding, and is it leaving something for IPO investors on bench? So this can be your second pointer. And third is, especially there are some companies where the IPO size is very limited. When I say very limited, I consider any IPO which is below 1,500 crores as a small IPO comparatively. In small IPO, plus if there is an IPO which is coming in the price band of below 100, by default, this IPO becomes attractive for a lot of people, especially retailers, looking at the small size of the IPO, and chances of oversubscription become used. So you can specifically study those IPO and make your decision. While subscribing in any IPO, you have to choose between two of the strategies. First strategy is buy and hold, that if you get allotment in any IPO, you will hold it for ages, for years to come. Second can be booking listing gain. As far as I am concerned, I am more of a listing gain investor, and I subscribe to IPO for listing gain because as per data of last 23 years, if there's an investor who has subscribed to every IPO which has come in the market in each year, then also he or she will be in profit if listing gain was the strategy which that particular investor has followed. So yeah, but no harm in second strategy, but you have to see what's your mindset, what your mindset is, and follow accordingly.
So most preferably, according to you, if it's an IPO that you're putting your money, then try and make it for listing gains, unless and until assured that you want to be for a longer term horizon in that particular investment. Let's move on, and let's talk about crypto, an investment or a money making bet that a lot of people are interested in. People have incurred losses, people have made good money as well. But then what could be your strategy, and what kind of tokens are we talking about? If you're really not sure about the cryptocurrency market and the way it moves and the kind of tokens that we are seeing, better to stick with known tokens like a Bitcoin, etc., or would you recommend them people, viewers, just to stay away from crypto totally?
My personal mindset is something which is very volatile. You should avoid it for short-term horizon. I'll just take example of Bitcoin, which is one of the most famous cryptocurrency which we have. In April 2021, it was trading around 60,000 plus. Then it went all down up to below 30,000, bounced back again, went up to 65,000 plus, again cracked, and probably for next 1 year, it was below 30,000, made bottom of $17,000. Now it's again back around 40,000 range. So what I'm trying to say is it's a very volatile asset class. Plus, for a retail investor, it is very difficult to understand nitty-gritties of cryptocurrency, how they are performing. Plus, of lately, we have seen a lot of defaults happening on various exchanges and on various platforms which are providing cryptos. Keeping everything in mind and understanding the risk which is involved in investing in cryptos, I personally feel if you are looking out for short-term opportunities, and if you are not that well aware about cryptos, we can easily avoid it and skip it for the time being.
Uh, Anand, let's also talk about putting short-term money in stocks. I mean, that is something that's recommended, but then one really needs to be sure of the kind of volatility and the kind of stock you are putting your money into, for which you really need to study about the company and the time horizon and the news trigger based on which you want to put your money in the short-term bet. What would you recommend? How can one go right over here and make money?
It's a simple three-step process. Firstly, you need to frame your strategy. You need to frame a mindset according to which you will do your swing trading. We call it swing trading whenever you are holding a stock for quick gains, probably few days to few weeks. We call it swing trading. In swing trading, most important point is to sort out with your strategy. Will you get your strategy on the very first day? It's practically not possible. You will have to figure out and test multiple strategies, and then you will finally find out 2 to 3 strategies which is suiting your mindset. So this is the first step. Second step is you will follow your stop loss very strictly. Whenever you are trading in stocks, that too for short term, if you don't know how to take stop losses, probably this game is not for you. You should take stop loss as insurance. For example, in life, we do term insurance, we do factory insurance. Suppose if I have a factory which has a lot of stuff which is prone to fire, I'll have fire insurance for that factory. But does it mean that tomorrow I will go and burn my complete factory? Obviously, I will not do it. In the same way, stop loss is your insurance. Just in case it is you get busted out on your stop losses and again your stock bounces back, it's absolutely okay, because that was the insurance for the worst case scenario which you have taken. So you have to take stop losses, that to strict ones. Thirdly, if you are a very new investor who is trying out his hand on swing trading, initially you can stick out to first 50 stocks. Eventually you can move out to mid cap, probably next 51st to 150th stock. And finally, when you have found your base, you can move out to more risky stocks and more comparatively illiquid stocks, probably some small cap, or maybe off lately a lot of interest is there in SME also. So eventually you can move there also, but first you need to try your hands out on large cap and mid cap stocks, and slowly and gradually you can increase your risk according to your mindset and according to your risk appetite.
All right, very interesting. These are the kind of bets one can place, keeping it aligned with your financial portfolio as well. In the end, let's also talk about FNO, where we see huge volume and huge interest of people coming in, especially to make money in short-term bet. How can one go around this without incurring huge losses and without burning their hands?
Ma'am, it's a brilliant way to maybe make some quick gains from the market, but you need to have that skill. See, trying anything out in which you don't have skill, your probability of success is very low. But when I talk about FNO, on one side you have skill set, and on second side you have capital. If you have a lot of capital, probably you can do option selling. You can test your strategies on multiple algo platforms, which is freely available right now in the market, and you can probably frame 2 to 3 strategies, 4 to 5 strategies combination, and do regular option selling and earn something out of market. But for that, you need sizable capital. When I talk about sizable capital, I am asking about 15 to 20 lakhs minimum of options portfolio, plus at least 40-50 lakhs of cash and mutual funds, so that this is not the whole money which you are investing in the market. You have cushioning as well for your goals. So if you have that capital, probably even if you are not very highly skilled, then also you can make money out of options. Versus if you have small capital, for example, you have few lakhs or maybe few thousand, and you want to do option buying and you want to make quick money, this is where maximum losses are happening. We see that regulator is warning a lot of people time and again that 95% of the people are losing money in options, future and options probably. That is because everyone is coming and trying to do option buying where you need high skills, because capital requirement is very low, but probability of success is also very low, because you are simply buying an option and you want that market moves in your direction, and that too quickly. So you are demanding a lot of things from market. So it's better that you first gain some experience, some skill, and then go towards option buying. If you are a fresh bee, I would suggest that IPO market and probably some swing trading is for you, and you can avoid options. As you become expert in the market, as you gain the skill, slowly and gradually you can move towards options as well.
I think that will be all. Thank you so much for being on the show today, Anant, and helping our viewers as to how they can make quick money in short term. Thank you so much. We'll slip into a